Hello and welcome, traders. My name is Rachel Bichelle, Senior Manager of Trading Services here at Charles Schwab, and your host for this Trading Price Patterns webcast. This is joined in the chat today by my friend and colleague, Brent Morris. Please feel free to chat in your questions, comments, requests during the session today, and we'll keep an eye on those. And yes, a couple of you guys are mentioning in the chat that you cannot see me. It is because I am live streaming from the office today. So you are just going to have my picture there. Sorry for the stagnant picture. But I'm excited to dive through. We're going to look at multiple time frames. We're going to find some different patterns. We'll kind of wind up with a watch list of patterns that we'll give you at the end as well. And then if you do like this video, please like this, give it a thumbs up. Please subscribe to us on Trader Talks Schwab Coaching. Now, before we dive in, let's hit some of those important disclosures here. So options carry a high level of risk in all investors. The information that we're going to cover is for general informational educational purposes only and should not be considered any type of recommendation or advice. And we are going to go through the Paper Money software application. Keep in mind that there are some major differences between paper and live. So let's get into what the agenda is. So it is the same as every week. We're going to start with our market overview, see what the S&P 500 is doing. We are going to review past trades, make our trade adjustments. We are then going to dive in to our watch list, discuss price patterns, discuss market structure, set our trading strategy in place. We're going to place new trades, and we're going to walk through how we're going to manage those trades as well. Okay. I have an important announcement. So we do have some upcoming workshops and market drives. So the next upcoming workshop that we have is going to be in Chicago. This is our technical analysis and option strategies workshop. I will be at this one. So if you guys are going to be at the one in Chicago in July, definitely throw that in the chat. I'll be happy to meet you at that one. We do have Dallas, that is a market drive event at the beginning of August, and then we have Orlando as well in the beginning of August. So that I will be at that one too. So give me a shout out in the chat if you're going to be at any of these specific workshops and market drives. So let's pivot and move to our market update here. So diving into a little bit of Thinkorswim, we can see that a couple levels of support have been broken over the last few trading days. Now, this is one that we've talked about in a couple different webcasts here, but after we saw the break through the 20-day moving average, we're starting to obviously see that slope change of the 20-day moving average, which is obviously that first indication that the trend may be changing here. So an easy way to tell that. We had a little bit of a rally back up into the 20-day moving average yesterday, but we can see that horizontal support right around 73.30, 73.50 was broken, and we're having this continued downside today. Now, this is also could be called an inside bar. So the total range of this bar today is encompassed in the total range of yesterday. So this could be a little bit of a pause, could be a possible reversal. We will have to see. This is technically called an inside bar here, where we're having a little bit of volatility pause, and it's occurring right at this level of old support, now new resistance. Now, if we can't hold on to this level, right above 73.30, 73.50 or so, we'll probably be looking to find that 50-day moving average.
I am back. Sorry about that little blip there. Hopefully you guys can hear me a lot better. I changed the headset, so it's kind of a work in progress here from the office. I'm used to being at home, as you guys know, so let me know if you can hear me a little bit better. With the audio, let me know in the chat, okay? So, but the last thing I got done saying was we're kind of trying to see the S&P 500 try to climb back above this level of old support, now new resistance, right around 73.50 or so. If we cannot hold this level with this inside day, if we do not see follow through to the upside, we're going to be probably looking at finding that next level of support at the 50-day moving average right above 7,200. So right now it's sitting at 7,214. Okay, I am seeing a ton of enthusiasm in the chat about it being much better. So thanks, guys. I'm glad you're hearing me uh, loud and clear now. Okay, so time to review some of our past trades in this class. There's a couple different ones we want to go through. So the first one was this Newmont trade that we placed a couple weeks ago. And this was the one that we saw a pattern and we placed two different trades, one bullish, one bearish, and we were waiting confirmation. So we essentially bought the 115 strike put for July in Newmont. And I am going to go to the chart here and remind you of the type of price pattern that we traded because we are going to take some action today on this trade. So I'm going to hide some of these different things on the chart that we were looking at before so we can just focus on the price action. So remember how we saw this little double top pattern, or you could even call it a triple top in this case, and we looked for that breakdown or that confirmed move below 104. So today we're actually hitting our target or pretty close to our target here, which was this familiar level of support here. So this is going to tell us as traders, since we have hit our target and this is a target type trade, we are going to close out our position, take our profits here, especially given the fact that we are up $700 on this position so far. So we have a profit and loss percentage of about 51%. I think we knocked that trade out of the park. So we're going to close this one here. So we're going to create a closing order by right-clicking on the trade on the monitor tab. And we are going to try to ask for the midpoint between this spread. Do a little bit of price discovery there. And we're going to hit confirm and send. Okay. Awesome. So we just got a filled on that. Let's take a look at our next trade. So we sold we essentially sold a cash secured put. We had three contracts in this. I believe it's an industrial stock, but Spire Global. Let's take a look at that chart. So Spire, whoops, SPIR. So we sold the 22 strike put because remember we saw this massive breakout. We saw this breakout of this base. We had this little cup and handle here. So essentially what we did was we set that cash secured put at that level of support. Well, now it's new resistance at $22 or so. And right now we've had price kind of come down and consolidate around this level so far. So we may be finding support here, but this is going to be a trade that we are going to hold on here for the near term. We only have about 8 days left until expiration. It would be kind of costly to close this out. But essentially, what we can do, we're going to be buying the stock essentially at $22 should the price of the stock expire below our strike price, so below 22. Keep in mind that we collected that premium up front, so we're getting that stock at a little bit of a discount. But what we can do, since the stock is in a uptrend or in more of a consolidation, after it expires, I think what we do here after we get assigned some of those shares, I think that would be a good time to possibly be selling some call options. So maybe we do a little bit of a wheel strategy on this one, especially since the implied volatility percentile is a little bit elevated, still telling us that now is probably a good time to be selling options more than anything else. And so we're going to wait till that expires. Again, that is in 8 days. Okay. So 8 days, going to wait till it expires. And then we're going to sell a covered call. And we'll probably be looking at former resistance up here to sell a call. So that's kind of what we'll be looking at here as well. I see some notes in the chat. Yeah, you guys noticed my mom's in the chat. She is retired and learning as much as she can about trading and technical analysis. She tells me all the time now when she sees charts and identifies price patterns. So just like you guys, she is here learning alongside of you guys as well. So awesome. So those are going to be our two trades that we're modifying. Now I have a ton more for us to look at today. So let's start with One, Open Door Technologies. I already drew some lines on this chart. As you guys can kind of see what may be forming here with Open Door, you notice it is a pretty low price stock, but there has been a lot of activity. There has been a lot of interest in the options, and there's also quite a large technical formation playing out. So we can actually see if I'm going to zoom in a little bit closer so you guys can see this a little bit better. But essentially, what we're looking at is we see this very long range that actually started at the beginning of February. So it's been going on for about 4.5 months or so that we've had this type of formation. So we have a clear cut level of resistance right around 560, 570. We'll say 570 here. And we have a pretty clear cut zone of support really down near like 417 or so. These are very odd numbers, but with lower price stocks, you kind of have to be a little bit more precise. But you guys, I want you guys to notice the technical formation over the last few days. I'm going to zoom into this a little bit more. And we had a recent kind of really retest, almost like a break of support here. And we've talked about this before in this class. When we see a break of support with a long lower wick, that could be a little bit of indication that we may be seeing a little bit of a low. And of course, as traders, as pattern traders, we're going to wait for that follow through. So we're going to wait for that confirmed bounce before even thinking about taking a trade in this case. But that long lower wick at support tells us that there was quite a bit of buying pressure there. And if you're just looking at the last 2 days, what do we call this? This formation that we have. We have the low, we have the support retest, and then what are we looking at today as far as confirmation? Let's see if you guys can remember this one. I'm going to give you a little minute in the chat here to tell me what you are seeing here. Because what I see is we may have a hold on our hands. So a close above the high of the low day. Of course, we still have a couple hours until market close, but it does look like price really wants to close above that prior high. So you guys all got it. You guys got the hold. So that would give us confirmation of a bounce here. So we know that when we're trading a range, we are looking to be buyers at support. We're looking to be sellers at resistance, or unless we see that penetration of that resistance and we see that resistance break. So a couple different ways that we could possibly trade this. We know that we're seeing a bounce from the low, so we know that price is more than likely, we can't predict, but it's more than likely headed to the upper bounds of that range because that's kind of what we've seen in this accumulation pattern. So let's just first of all measure the range. We're going to take a look at this range. We're going to measure it from highs to lows, and that's about $1.50 or so. Okay, so let's say that if we did see a breakout to the upside, that would give us a measured move of, let's say, close to 723 or so. But we could also just take a directional trade and trade this bounce to the upper bounds of that range as well. So that could be another area where we can take profit. So if we do see a kabold or if the price goes up here, we see a close below the low of the high day, that could give us a exit type of strategy in that case if we're just trading these bounds. So, and I'm seeing a ton of messages in the chat about keeping this headset. I'll try to steal it when I walk out of here. Don't tell anyone, but just kidding. Okay, so what we're gonna do, I want you guys to notice this little tiny yellow flag or this little tiny yellow tag in the upper left-hand corner. It shows us the implied volatility percentile. Now we can definitely buy shares when we do see a bounce here, but I think this gives us an opportunity to take a directional type of trade, especially given the volatility regime that we're in. So we do have a pretty low implied volatility percentile. This is telling us that we have implied volatility in the lower third of where it's been over the last year. So this could tell a trader that, hey, now may be a good time to be buying options. And we know that if we are looking for a bullish directional trade, because we're kind of expecting price to find this area of resistance once again at the top of the range, that may give us a option buying strategy for buying a call option. So let's take a look at the options and talk through some different options here. So one of the other things that we need to look at as well is just the amount of time. We already touched on that. It's been about 4 months in time for this pattern that has taken place so far. We know it's not complete yet, but we could look out about 4 months in time because it is assumed that if this price does break to the upside, let's say that it does reach resistance, and let's say that it does eventually break to the upside. If it does, it may take about 4 months to reach our measured move. So what we're going to do here is we're going to go to the trade tab and we're going to look at about 4 months out till expiration, just in case, because if we do see that kobold or we see that price gets to the top of that range, that is where we will take our profit if we see a close below the low of the high day. So that would give us a resistance bounce. That would tell us, hey, now is the time to close that option position. So we're going to watch for that. But if we don't see that and we do see a break of resistance, we are going to ride this options trade all the way up to that measured move. So two different scenarios that are going to play out. Okay. So we're going to look at the 16th of October just because of that time component. And what we're going to do, we're going to look a little bit in the money. We're going to look for a little bit of intrinsic value. So we're going to be looking at these options here on the left-hand side. And so the four strike is going to be the one that we're going to look at here. Actually, we have a little bit of a tighter spread on the five strike. We're going to look at the five strike here. We do still see a little bit of a larger delta, so it's close to a delta of about 60, meaning that if we do see a dollar move up in the stock, we would likely see about a 58-cent move to the upside in the options. So keep that in mind. So we're going to look here, since we do have a little bit of tighter spread, I want you guys to also note the volume and open interest as well. Of course, that comes secondary to looking at the spread, but another thing to kind of keep an eye on. It's kind of funny that we actually have no time decay right now as far as what this model is telling us. So we're barely going to see any time decay on this option so far. Of course, the closer you get to expiration, the more time decay you will see, but we're going far enough out in time that it's really not going to be too much of a factor for us right now. So we're going to look to buy this option. We are going to bump this up to 10 contracts because what we can do in this account, we know that we can risk as much as 5% of our account in a particular trade, which gives us about a $10,000 limit. And this is a pretty small limit. This is only about $1,000 that we're looking to spend. So that's going to be our max loss on the trade. That's essentially what the premium is that we are paying for this option. So we're paying that premium $1.01 per 100 shares. So when you do the math, that's about $1,000 for unlimited upside. Okay. So we have unlimited max profit to the upside there. And by expiration, we just need that price of the stock to be above 601. So that's if we don't close it before expiration. So we're going to go back and hit edit here. We also know that the most that we are willing to risk in any one trade, just from like the difference of our entry to our stop, we've talked about that, about only risking 1% of our account in a trade, and that gives us about a $2,000 risk. Now, this stays within our risk, so we're not going to put a stop on this trade at all in this scenario. So we're not going to put a stop on that one. Now, a couple different things that we can do here. So what I'm going to do is I'm going to change this to a first triggers sequence. And I'm going to right click and I'm going to duplicate this order. Okay. Oops. Or create opposite order is what we should do. And then we're going to lock that in. And we're going to make these good till canceled. So I already talked about a couple different scenarios that we could do for our exit strategy. So you could set this up a couple different ways. Um, so one of the ways is if you see a close below the low of the high day. So an example of this would be if price does run up to the upside and you see a close below the high, this would be like this candle. See how this candle was the high candle that touched resistance? You didn't have a close below it till here. So obviously that's like halfway back down the range, but you kind of get the idea. So that could be one area of a profit taking zone. Another area of that profit taking zone is that measured move up to $7.23. So we're going to monitor the trade, but we're going to put in our profit target initially for that 723. Okay. So we're going to look at 723 and we are going to use our conditional orders. So for those of you that have not seen this before, we're going to place our options order based off of a conditional move of the stock. So we're going to click this little gear on the right-hand side of the screen here, and we are going to open up this conditional order entry. And so what we're going to do is we're going to say open is greater than or equal to 723. That is when we want to close out this trade. So when the market price is greater than or equal to 723, that is our measured move. If we do see a breakout, and we don't know what the price of the option is going to be at that time. Now we can use the options Theoprice tool on the options chain, but we don't know what the volatility is going to be at that time, which is obviously going to impact the price of the options because if volatility goes up, so will the price of our option. We don't know how much time is going to pass. We don't know the speed at which that move is going to happen. So what we can do is we can still have control over our price here on the option, but to, we could link this to the trigger. And so we could say that we want to sell this option actually we want to do that to the bid in this case. So we're going to say, since it is a tight spread, we're going to say that whatever the price of the option is at that time, that the price of the stock hits 723, if it does, we are going to send a limit order right at the current bid. Now you could say you want to send it a penny below, a couple pennies below, whatever you want. We're just going to send a marketable upon entry limit order right at the bid when the price of the stock hits that price. Okay, so we're going to hit save. Keep in mind also that these conditions do not work in the extended hours. Obviously, the options market isn't open in the extended hours. So if you do see kind of like a major move in the stock, just kind of keep that in mind. With kind of some of the risks here, of course, you're still going to have control of the price with that limit order, though. So we are going to hit confirm and send, and we're going to make sure we send this to our price patterns class. So we're going to hit send there. Now let me keep an eye on the chat. Let's see. Okay. I had Michael asked about sharing that script. So yes, I will share that script that is on the chart. Ben Watson either created that or found that. He's so smart that I would say he probably created that script. So I'm going to share that with you guys here. And keep in mind that these scripts are not guaranteed for accuracy, timing, etc. So I'm going to hit share and I'll put that in the chat here. Okay. Okay, let's see. If we have any other questions. Okay. Okay, perfect. So no other real pressing questions at this point. Let's take a look at some other price patterns that we're kind of seeing stack up here. So We have a lot of movement in healthcare. We have some movement in financials. We have some movement in industrials. You guys can kind of see my watch list here of some things we're seeing. Let's look at Prudential. Let's look at financials because I think we have something here forming on the chart, maybe a little breakout on our hands. What type of price pattern do you guys see here for this one? So I already drew a couple different lines on the chart, but let me know in the chat what you guys are seeing because maybe it's similar to what I'm seeing here. Okay. And you guys guessed it. So we have a little bit of cup and handle action. We may have had a little bit of a consolidation. Some may call this like a little bit of a rising wedge, even with the recent price action over the last month or so. So many different things that you can kind of go about here. But a lot of you guys are saying that cup and handle. So yes, we do have that little cup and we do have that little handle right here. And so remember with a cup and handle, you have almost like this bowl shaped type of formation. So you have the cup, it's this rounded bottom here. And remember, we have that first touch of resistance, and then price kind of makes its way no more than like about a third of the way down back towards that cup. And it forms this little handle here. Sometimes it looks more of like a little bit of a consolidation. So sometimes like more of a rectangle or box shaped pattern, which is a little bit like we saw here. And sometimes it can look as more of a another little smaller rounded base. So you are seeing the breakthrough of that today, which almost forms a new pattern in itself. I want to kind of show this one for you guys as well. What would you guys call that? We have a little bit of a rising wedge there, a rising wedge breakout. So that handle itself formed a new pattern as well. So depending on your time frame, you could be looking to trade this pattern a couple different ways. So if you have a longer term time frame, you could be looking to trade this longer term pattern. And then you obviously have fractal patterns that exist underneath. So that's kind of one way that you could go about trading patterns is you look for a longer time frame, you may see in the shorter time frame, you may see a type of different formation that may be supporting your thesis of the overall pattern that you're seeing, the breakout that you're seeing. But if you have a shorter time horizon, you may say, hey, this rising wedge breakout is the way that I want to play this trade. Another way that you could do this is if you just go down to a smaller time frame. So if you're looking at a smaller time frame, I'm going to remove these drawings again because this is kind of one of the things that we talk about in this class is looking at different time frames. Notice on this time frame you see a fractal pattern in itself. I wonder if you guys are kind of seeing this. I'm going to take this off for now. Are you guys seeing a little bit of a fractal pattern here? I know this is kind of spotty because it's a 90-day, 4 hours, but look at this. What do we have here? Maybe a little another cup and handle pattern. So you have 105 as a resistance. You had this low, this rounded base take place at 100. You had a little bit of a handle pullback here. I mean, it kind of falls a little bit outside the rules, but it's okay. Sometimes everything doesn't fit the rule book exactly. Maybe the handle pulls back a little bit more. As long as you wait for confirmation, the same type of rules apply. So that's just kind of showing you how if you do have a shorter time frame, you're not stuck to the mercy of those longer time frames because we know that the market loves symmetry. So typically, however long that it takes for that price pattern to form is how long it may take for the price of the stock to meet that measured objective, which a lot of the times is what you see. Now, obviously, price patterns are not guarantees. We say that all the time here, but this is just a different way that you could kind of look at some of these price patterns and trade these price patterns here. So let's see if this does meet our rules for a 2% break, because we always talk about that 2% break in this class. We want a 2% break above that level of resistance. And so I'm going to zoom in a little bit closer, see if we get that little 2% break here. Oops, we're going to have to go down a little bit more. 2% break. Okay, close enough. So this is going to be about our 2% break. I'm going to zoom back out. Okay, so our 2% break, which would give us confirmation, that would start to penetrate this previous gap that we saw. So you can see, or I guess we already tried to penetrate it a little bit before and that gap was closed. So it's kind of around that same area where we're seeing this long bearish candle. So that's going to kind of give us, as a trader who's waiting for confirmation, maybe you're looking for one close above this level, maybe two or three closes, like the Horner rule. In this class, we talk a lot about that percentage filter. So we look for that 2% break above resistance. And so that's what we're going to be looking for as far as our entry. Now, let's take a Fibonacci and actually measure our measured move. So the easiest way that you can do this with a cup and handle, since we know that with price patterns, you guys have seen me do this enough, you always take the entire depth of the pattern and project that from the breakout point. So the entire depth is going to be the whole depth of that cup. And so an easy way for you guys to measure that, just take a Fibonacci retracement from the highs to the lows of the cup. And so what does this give us? I'm going to clean this up a little bit so you guys can see that. That's going to give us a few different levels here. So if you want to be a little bit more conservative, you can say, hey, I want to trade with the 161.8% retracement. That would kind of fall right in the middle of that big candle that you saw before. Sometimes the midpoints of those very large candles do act as a price magnet, almost like a fair value gap in a sense. So that could be a valid profit taking level. But the entire measured move of this pattern is going to be up at 118.87 here. So that's the entire measured move. And we always laugh in this class about how the math seems to work out. Of course, that's not a guarantee, but it's so funny that the measured move aligns up with a familiar level of resistance at yearly highs. So notice that. Sometimes when you don't see a previous high, you can actually take one more step and zoom out a little bit more and see where that measured move could possibly fall. So if you guys are looking here on the longer term, which I would always suggest you do, even if you do have a shorter time frame, as a technician, especially trading these price patterns, you want to understand what the context of the overall trend is and where that price pattern is essentially developing within the primary trend. And so if you notice here, let's say the price does go to 200. Let's say that it does walk that measured move. You're going to see a larger formation taking shape here, which is essentially, possibly, you guessed it, a large double bottom. Okay, obviously can't call it that yet because price has not reached that level. It has not breached that level, but it gives you a larger pattern to keep an eye on if price does go there. We're seeing some relative strength and rotation into the financials, which does support the thesis that, hey, we may see a little bit of a breakout here. We could see a bit of a run to the upside. But of course, price has to convince us first. So that's why we wait for confirmation. We are going to set our targets there. Now, talked about how our entry could be 107. Now, there's a few different ways that you could play this. So you could obviously use the common stock and you could set a buy stop for the price at 107 and target all the way up to 118. So that could be one way. We could look at the options market again because we notice in the IV percentile, it is pretty low. So it is in the lower half of where we've seen over the last year so far. So that could even give us maybe some more upside and more capital efficiency using the options market. So maybe we say that, hey, we're going to use 107 as a little bit of a trigger to say, maybe we want to buy a call option when the price of the stock is at 107 and we want to ride that to the upside. Okay. So let's kind of go with that. Let's take a look at what the spreads look like on the options. And let's also take a look at the time that this took to complete, which was about 4 months in time. Okay. So 4 months in time, we're going to look out a little bit just like we did last time. So let's take a let's look at September. So that's about 3 months out. Sometimes we'll see a quicker run to the upside, but since we don't see an October expiration here. So we're going to look at September. And what we're going to notice so far, we do still have moderately tight spreads here. So difference between the bid and ask is no more than 10%. So that's going to be our rule. We can also look at the level of open interest and volume. We have thousands of contracts of open interest, or I guess I should say 1,000 or a little bit more than 1,000 of open interest here within kind of the at the money, slightly in the money options there. Low volume, but still moderately tight enough spread here. We have a tighter spread on, we have a little bit tighter spread on this 100 strike. So we're going to go with this one in particular. And we're going to hit the ask price on this option. Okay. Now, we already talked about how the price of the stock needs to hit our certain price of 107. What was that? 107.27 for us to want to take this trade. Now, we don't know what the price of the option is going to be at the time, but what we can do is we can use this options Theo price mark and kind of calculate. So we can say that, hey, in about a week or so, if the price of the stock goes up $2, we're going to say up $2, where could the price of my option be? So this is just assuming a $2 move to the upside within the next week or so. Okay. So this would give us a Theo price. So the mark price right now is about 9.45. This could give us a Theo price of a little bit more than $1 higher than where we're at. So that just kind of gives you a little bit of a idea of where we could possibly see the price of the options possibly being. Of course, this is all theoretical, so keep that in mind. But what we're going to use is the same limit offset that we used in the last order. So we're going to go to the right-hand side here. We are going to put in the price. We're going to say is greater than or equal to, and we said 107.20, I think was pretty close to where we were at. 107.20. So when the price of the stock is greater than or equal to 107.20, this is where we want to put in a limit offset. We want to put this at the asking price. Now, if you want to have a little bit more price discovery, you could even use the mark price, okay? So you could say, I want to use the mark price and maybe I want to ask for, let's say, we'll say we'll ask for 20 cents over the mark. Okay. So if we do have a little bit of a wide spread, we're going to ask for 20 cents over the mark. Okay. Obviously, that doesn't guarantee you a fill. If you want to be a little bit more conservative, you could say at the asking price of that option. So again, I'll kind of show you how to do that. You don't have to do that. You can do that zero offset. That will send a limit order at whatever the price of the ask is at the time that the price of the stock reaches that level. We're going to hit this to change it to good till canceled, and we're going to hit save. Okay. So that's our first order. Now keep in mind, we're still staying within the risk parameters of our account. So even if this does fill at 10, 11, 12, we're still staying within that $2,000 to our downside because the most we are risking in this trade, we're just doing one contract right now, so very small position size, but we're only risking a little over 1,000, assuming that it gets filled above $10 or so. So we're not going to put a stop on this one. We're going to see if it does run to the upside. We can always put a stop on it later. We can add to our position with a breakout, but this is going to be our first kind of testing the waters type of position here. So we're going to go to first triggers sequence. We're going to right click, create opposite order, and we're going to lock that in. And so what we're going to do, we're going to look at that measured move, and we're going to say we're going to close our options trade when the price of the stock hits 118. So notice we're being very targeted today. So we're using our targets, we're using those as conditional orders. Now, if you feel more comfortable putting in an actual price for the option, you can be more than happy to do that as well. But we're going to just kind of use what we're using here. So we're going to say, what was it? 118.87. 118.87. So greater than 118.87. And that's going to sell at the current bid. Okay, so we're going to hit save. Here we go. So we have our sequence set up. Again, the most we can lose is what we're paying for the option. The most we can make is up to infinity if the stock price just keeps going up. But we want to be a target trader and we want to take our profits, especially if the price of the stock runs to our measured move. So we're going to send this in the price patterns class and we are going to hit send. Okay. Awesome. So we went through those trades there. Let's see. Okay, so I had a question about the grid that I am using. Yes, I can send this grid to you guys. I'll share this grid. It just has a couple different time frames. So I'll send that to you guys as well. Again, these are scripts are not guaranteed for accuracy, timing, or results. So that's just a little nice time frame grid to look at multiple time frames. We're running out of time here, but a couple other ones that kind of caught my eye as far as patterns, because we always have to end this class looking at a couple other patterns that are on the watch list, maybe for trades next week or so. Car, this industrials, we had a little bit of an ascending triangle. You could even call it a breakout of a rising wedge. It is a longer kind of bowl-shaped pattern. And we see a little bit of a breakout, maybe a little bit of a retest. This one is probably one of my favorites of looking at just how symmetrical the price pattern is. So you have this neckline prices running into that right now. You have an inverted, possible inverted head and shoulders. So this is your left shoulder, possibly your head and your right shoulder. And notice that slanted neckline with higher highs. So it's slightly bullish because you have those higher lows as well. And price right now looks like it's forming a possible bull flag right under that resistance. So you guys can kind of do the math that way, but that gives you a little couple other patterns to look at. You have McDonald's on your list that may be forming a double bottom here. McKesson just broke out of a double bottom. Marriott just broke out of a rising wedge, maybe re-entering the pattern. So maybe a little bit of a false break. Look for a retest of that lower one. And then Eli Lilly broke out of a cup and handle and is just retesting that level of support. So I know we're kind of running out of time, so please smash that like button for us today. Please give both Brent and I a follow on X if you like what you see. You'll see lots of price patterns, lots of charts from both of us. He is Brent Morris CS. I am Rachel Dash CS. I'm glad we rounded out this class with you guys being able to hear me finally. Thank you all for joining. Thank you, Brent, for helping us out. And thank you for our producers who are bearing with me through some of the tech things today. So please subscribe to us on Trader Talks, and I will see you later, traders.